What's going on, everybody? You guys have been asking for it, and it's finally here. The PRR strategy, full video, full breakdown, full everything. So I'm gonna be giving a couple examples here. I'm gonna be showing you guys a bullish example, a bearish example. I'm gonna tell you guys how to find the best quality PRR setups, which is what I trade daily. So I'm going to be making sure to get as much information in this video as possible because I have received over a couple hundred comments across various social platforms of mine, all requesting a full strategy breakdown, not just a short. So here it is. Now, real quick, if you guys are looking for a free community of dedicated traders looking towards improving themselves and improving their trading, I have tons of educational information inside of my Discord, in the free Discord in my bio. Now it is time to get into the strategy. First of all, what does PRR mean? PRR is the pool raid reversal model that I trade, and basically we wait for a pool of liquidity to get swept, and then we wait for a reversal confirmation as an ICT concept, whether that's an SMT. We will use that as our entry model here. So right now I'm on a 15-minute chart. This does not require a 15-minute chart at all times, but what I like to do is I like to go into a top-down analysis. So I go from the 1 day to the 4 hour to the 1 hour to the 30-minute to the 15, the 5, the 3, the 2, the 1. I know that's a lot, but the higher time frames are extremely important when trading this model because it is easy to get trapped up in taking the wrong setups here. What I'd like to note is that over here, we had this New York PM session, and we had a sweep of liquidity indicated by this little raid up here over these equal highs, and we had this during the London session. Now, it is important to note, I do not trade London session, I don't trade Tokyo, I only trade New York. So this would not be a valid trade that we could take, even though it does look kind of nice. So now our New York trading session opens right here. We are going to be looking for a prominent level of liquidity at the lows now. Now the reason that we are looking for lows is because we have already seen the highs get swept. The next target after the highs get swept are the lows. So we're going to mark out this very prominent low, and what makes this prominent is that this is a data candle. How do I know this? The reason I know this is a data candle without having to look at Forex Factory or the news calendar is because look at the range on this candle. We can go right here and we can draw our box and look towards the right, and we see 530 to 439. Basically, this is around 90 to 100 points of a data range right here. So this is a very volatile candle, obviously indicated by the data range. Now, this is also a very prominent pull of liquidity because we have these stack lows right here, right next to it. Now, for the PRR model, I want to wait for price to break the pool of liquidity, which is the pool raid. So we want to see the pool get raided, meaning price goes under this level and takes out the liquidity that's resting under right here. Now we're going to drop into a lower time frame because the reason I'm using the 15-minute right now is just so you guys can see these lows, because if I was on a lower time frame it would have been harder to see all on one chart. So this line right here is the same low we just had marked out about a second ago. Now we're basically going to sit here and we're going to wait for price to sweep under the level. As you guys can see right here, price swept under the level and took out the liquidity resting under that low that we just marked out. This is crucial for the strategy, and this is the only way that you can take an entry with the strategy. You have to see price go under that level that we just marked out. We cannot see price tap the level. We can't see it go close to the level. We have to see a full dip under it and then a move up. Now, we notice that on the way down to sweep out the lows down here, we did form a fair value gap. With a fair value gap, we want to see price draw through this level, and we want to see a close above or right at the level, even if it's slightly under. If it's a strong bullish candle, I will still take a long entry here. As you guys can see right here, we close perfectly at the fair value gap, and we have a little extra wick up here that takes us slightly higher. This is perfect confirmation that I can enter a buy right here. Now it's important to mark out where our stop loss is going to be. A lot of people don't talk about where you should put your stop loss. Now, where I like to put my stop loss in this model is where an FVG would be formed. Now, what I mean by that, notice how right here we have this low and we have this displacement candle. Price is likely to not come back down here immediately since we had such a bullish run up. And just like that, we have our low formed and we did make a fair value gap. Now, since we have this fair value gap, I want to make sure to put my stop loss under the fair value gap. It's crucial that it's under and not in it because price likes to draw back into these zones sometimes, which is good for adding in more size and DCAing, but it's not good for your stop loss. So make sure you put your stop loss under the fair value gap. Now, for our take profit, as you guys can see right here, we have a fair value gap that got formed. This would count as internal range liquidity, and we're going to go and put our target here for 41 points, and we're only risking 14. This is basically a 3 risk to reward ratio, which is perfect here. Now, let's see how this trade plays out. We see price draws a little bit lower here. Now we see here we have displacement over this internal high. This officially makes it a market structure shift. Now, the reason this counts as a market structure shift is because we had a displacement candle, meaning one candle that had a ton of volume and drove right through that internal range high. This is perfect confluence, and this is a second way that you can enter with this model. If you don't see the inversion get formed, wait for displacement over the internal high, and then use that as a market structure shift as an entry here. Now let's continue playing out this trade to see what happens. As you guys can see, prices officially reached into the fair value gap that we formed here. We've officially tapped the equilibrium of the fair value gap, which is good confirmation that if we have one more bullish candle above the equilibrium, we will most likely fill this. And right there with this wick, this gives me enough confirmation that we will fill this fair value gap. So as you guys can see here, it's literally a three-step model. We had our sweep of liquidity, we had our inversion entry, we had our market structure shift as extra confluence, and we had our internal range liquidity, TP. Now here's a bearish PRR model entry. Right now we are on the 1 minute. We notice that we have these lows down here. We also notice that this high was formed around 9:15. Price came down to sweep out all of the liquidity in this range with some displacement, as you guys can see by this candle. Now we see price basically come down and draw back upwards. But we did not hit this low yet, and we did not sweep all of the liquidity down here, just around here. Now we're going to wait for a high to get swept over here. So this high got swept right here. Now we're going to mark out our another high, which is our prominent swing high right here, and we see price swept it out right here. Now we have our final high marked out right here with this swing high. Now what do we notice with this one? This one, we have a fair value gap getting formed. Now we've also noticed that look at all of these wicks. We have tons of bearish energy here. We also have tons of bearish candles. And these aren't just like tiny little candles like this one, it's big candles like this. We've even had them in sequences of 4. Now I'm not really a pattern trader, but it's pretty obvious that when you're seeing more down candles than up candles, we're most likely to have more selling pressure than buying pressure. So now that we have our imbalance formed, even though we did not tap exactly onto this fair value gap, it's safe to say that we can take a short because of all of these liquidities that got swept, and we finally formed the imbalance. Now for this trade, if you were to enter here, you'd also have a tighter stop loss, meaning you'd lose less on the trade with a higher reward. So we put our stop loss right here, and where are we going to put our TP? Our TP is going to go to these lows right here that we marked out at the beginning of this analysis. Now it's important to use a level like this swing low as a trim zone. Now let's see how this plays out. We instantly see a bearish candle here. Now you could enter on this candle if you wanted additional confluence, but the reason I entered up there is because of the strong bearish pressure that we saw with the previous candles. Now, this is our first take profit zone right here. So we're going to mark this out as TP1. And the reason this is our first take profit is because it's a swing low, it's internal range, and it also lines up almost perfectly with the equilibrium of this zone. Now right here, as you guys can see, price went down and went through this low with displacement by this massive candle here. And now it's safe to say we can take off a contract. So we're in shorts. I'm going to click buy one. We just took off one, and we have one contract remaining. As you guys can see right here, we had a crazy candle here. With all the volume here, this is safe to say that because we did not come back up to sweep this high or tap into the fair value gap, it's safe to say that we are going to go lower. As you guys see right here, this isn't extremely important, but we had another inversion get formed here, which is additional confluence that we will return to this low. As you guys can see right here, we took our final contract off for a total of 2.6K on that. We risked 12 points to make 83. This is why this model has the highest RR. If you're buying in levels of buy side and sell side liquidity, there's statistically less drawdown that you are going to be experiencing. This is a 6.5 RR on that trade, so extremely good. And also, I have a free PRR setup rating PDF that is in the link on my channel bio. Just go to the Watt page and it should be the second tab. It just says free PRR PDF. And just claim it completely free, and it goes through all the different tiers of setups like A+, A, B+, B-, C, all that kind of stuff. So go check that out. It will help you guys a ton with this model. Now I'll see you guys in the next video.